Hello Black Boxers, welcome back. So this was these are the setups that we have seen on my previous video, right? In this mentorship. So we have a setup down there and another setup here, which ended up in the third model and traded down and back. And then we had another setup here, that's a buy up there. And then we had another setup there, which is hidden, which can be seen here. As you can see, this is a buy, and this is used as a projection because we can't enter a trade based on this black box, because it will force us to enter a trade down there because there is a wick and also plus up there, so there is a huge there is a huge risk. So we won't trade this black box. We wanna use it for TP determination here. Then we wait for a new black box, okay, a new black box, just like this one, just like here, right here. So finally we got one, it's a break, so we enter a trade. TP will take partials at 3, take partials, then trade your stops. Okay, trade your stops. That was what we have seen on our previous video. So now let's go to our new video right here. So yeah, I'm showing TP2 and TP3, as you can see. TP2 wasn't held here, okay, so right here. Alright, so let me go back there and let me see if we had a black box. Okay. Right there seems to be a black box. That is what this is showing us. As you can see, there is a black box here to the spinning top, and then this one broke, as I said. And ride it down to TP2, right there. Take partials, let the other run, and then more at TP3. Beautiful execution, take partials, and trade your stop to where? To down there, to your break even. And after price advances more, you have to trade your stop, okay, trade the upside, because price will not move in one direction forever, it will return. So I gotta protect your money. So in this setup, in this picture, we have a black box there. There's 3 options, but I'm abandoning the first candle because in the second candle because they are not similar with this one, because these 3 are similar while they are full bodied. So right there I sell. That's a sell right there, down there at 2.5%, down there, that's a sell. And then you use this black boxes projection to the downside if we break the downside. Where in the downside? So assume that you didn't see this one, okay? So we think that the price is still moving to the downside, so we project the downside, but as you can see, price retraced back up and took that high supported and made its way to the upside. It changed to a buy program. So here it was a sell program, so which means we sold, and then what happened? Delivered to down there. That is beautiful. You can take partials there. I already told you you can use 2 candles. The previous 2 candles to take partials for the third one, for the breaking candle. If these kinds of things happen, okay. So a partial will TP1 and TP2 will be down there, so we take partials right there. So the market now reverse direction. Every time a black box forms, we are entering a trade. Okay, there we go. 2, 3, alright? And then for down block, that's a buy. Stop loss down there. Okay, stop loss down there. That's why we are placing our stop loss at 2.5%. 2.5% is down there. Okay, it's not a little bit above because 0.5% is down there. It's down there. 5% is full grid. 2.5% is halfway of the grid. Okay, so that's why the price didn't even. It came near, took the low, and then went up. Right? It's in the momentum. So that's basically a second model. I said that was a black book. We broke, and then this candle came back, supported, and bam. And I already told you that this place of the black box is called silver zone. This place from your stop loss to the black box, between your stop loss and the black box, is called the golden zone. So when the price comes to the golden zone without hitting TP2, how do you know if TP2 is not hit or if it is hit? So you measure from, as you can see, from this one to this one. Why? Because have a closer look. Have a closer look. This candle's body is below, halfway below, right? The second candle's body is almost, almost halfway at halfway. This one is at a quarter. The body, look at it, look at that. And then the third candle, look at it. It is parallel to the previous candle, look at that. Which one is similar? Is it this one or is it this one, the first one? It is the second. It is the second, the third, okay, and the fourth candle from this. So these are the ones that I am interested in, not this one. That is already gone. That is gone. Okay, it is deleted. It is deleted. This one, now I'm interested in this candle anymore. So we are on this one. So it means from the body to that breaking candle, we deliver a new. As you can see, TP2 was up there, never nailed, which means we can still enter a buy on the what? Of the retest on the second model. Based on the second model, enter a buy. A buy. Okay. That's exactly what happened. It is just beautiful. Just beautiful. Then after that, we are in a buy position at the first place, right there, down there, and then another buy by using the second model. This is the first model, and then we got another black box, 1, 2, 3, right? Then we buy this one by using the first model, right? This is a black box. It is a real breakout. There is no support. There is no coming back. It is straight to your tip. So TP2 nailed, take partials. TP2 nailed, take partials for this one. And right there, down there, TP2 for this one. Take partials, and unfortunately your stop loss will be because you let the other run. You have to do that. It's okay. It is okay. Don't panic. Don't panic. We are making a lot of money from here, and it's okay to lose just a small amount. Okay, you cannot win every time. Then what happened? This price just went rogue. It went rogue. It pumped like crazy to the moon. It's crazy. So our entry was precision. It was precise. That was our entry. Best entry was retest, and then second entry buy. Still these buys, all of these buys are running to the upside. All of them are running. Until when? Until TP3. So you take partials for all of them. and then you trade your stop at your entry price. Once the market advances, trade. Once the market advances, trade. Once the market advances, trade. Okay, trade. In this way, when the market was trading this way, and when you find another black box, take a trade. If it satisfies your risk and if the setup satisfies your criteria. Okay. Then afterwards, this black box formed, but unfortunately we do not enter why. Our stop loss must be down there. Our entry must be up there, so that is not gonna work. Look at that much risk, not gonna happen. I'm not gonna risk that much. So we only use this as what? For directional indicator. As a directional indicator to the upside, just like I did here. Look at that. Just like I did here. Look at that. So I measure from the body to the body, then TP1 is here, TP2 is most likely up there, which means this price has a possibility to go up. It has a possibility to go up. So in this way, I found another black box. Where exactly? Not this one, not this one, not this one, definitely. But this doji, I mean the spinning top, this one, this big black, I mean this big red card, this big red card, and that's the same. That's a 2.5% achieved. That's the same. Stop loss up there. So that's the same. And then the same thing happens. If it is a doji like this, you measure from the wicks, take profit at TP3 down there. Most likely this price has come down there to test this black box here, okay, down there. So on its way achieving this black box TP3. So you take partials there, you let that then afterwards I don't know what happened. Okay, let us see. Okay, this is another setup. So okay, let me see. So there is nothing like this here. So that's exactly what happened. So I don't know what happened right here. So we will manage it based on what the market gives us. So if it advances more, I already took my partials for this trade, and my stop loss will be triggered, and I am already in trade for this one. But if you didn't trade it too close, you will not be out of the trade unless the price completely reverses. Okay, that's exactly what happened. So next, let's go to the next chart. Okay, next chart. Do you see any black box here? Do you see any black box here? Yes, where? Down there. 1, 2, the red candle. 3. That thing broke. What is that? A buy. What is that up there? That is a buy. Okay, this was a 2 black box. This was a buy. Okay, after that, look how it collapses. So you measure from the body. It is a full body. If it is a full bodied candle from the previous 2 candles, you measure from the body and find out the TP3, and that's that TP3 take partials for this one. Okay, you got it, and then look at the market accumulated a little bit sideways movement, and then finally pumped upside to your take profit again. Stop loss still down there, and then another one forward. 1, 2, 3. What is that? A buy. A buy. That's a buy. You have a buy down there, and again another buy. Okay. Then bam, TP1 from the bodies as you can see, and TP2 never touch it, which means we can trade the retest. Which retest? This one's retest. Not that one's, not that one's. It is this one's. Because we are trading the reset. The most recent black box we are trading, the most recent, not the old one. Nobody cares about the old one. I mean, there might be some price relations, but I don't care about that. It's complicated. I try to make sense of it, but it is complicated, so I don't need that to make money. So what happened? It pumped, take partials, where at, okay, TP2 is not it, which means there is nothing you can do. If the price approaches TP2 a little bit, almost 90 to 95% is reached to TP2, which means you take partials. But here it is not even close, which means we have to always acquire moving capital. So which means I'm entering a buy again at the test. First start here at this candle because I think came close. Second at this candle, that's the buy. Okay. If TP2 is not it and your stop loss is down there, look how close it is. Your stop loss and your entry, it is just the second model. It is beautiful, guys. It is beautiful. It's beautiful, and I already showed you how it is valid. If it is valid, how do you know if the second model is tradable, if it is valid or not? I already showed you. It has to, the previous candle has to hit TP2, I mean black box. If the previous black box that didn't hit TP2, we are on the winner because we are aiming for TP2 and of course TP3 too. The price has some momentum. So anyways, that's exactly what you're gonna do. Another buy here. Buy 1, buy 2, buy 3, then the price came back again. Buy 4. That's it, buy rising. Okay, so before that, price came in, right? So we found a black box where 1, 2, 3. Okay, 1, 2, 3. So this thing broke. That's a sale. That's a sale. I'm not gonna lie. I'm gonna say that one. That's a sale. Up sale. Then you measure from this to this one candles TP3 down there. TP3. Okay, and then you take partial TP3 is hit. If it is not, let it roll. Let the price roll. Okay, you entered it down there. Let the price roll. Are already in a buy position. So the reason that we are entering a second model here, even though we should trade the recent black box here, is because TP2 was not hit. Okay, TP2 for this was not hit, but TP2 for this one is already hit. Where? Up there, done. If you measure from there, that's TP1, that's TP2. Up there, it is done. So that is gone. That setup is gone. Which setup is not gone? This one, and this one, and this one. These setups are still in play. So I will use this one for a trade up. What if it breaks down? I don't care. Why? Because I am in a sell position with this one. If it breaks down, it wants us to break down and fulfill the TP2 in the downward direction. Okay, if it wants to collapse and break this 2.5% down there and it wants to come down, I am already in a sell position. I'm safe. So I'm a winner. I only lost a little money because why? Because this is my stop loss. And that is my entry. Look at how close it is. It's ridiculous. It's a little money. It's beautiful. The second model is amazing. So that is why we are trading this one. we are trading the second model on this one, not this one, because TP2 was not it. So you prioritize the previous ones and the new one. The previous one and the new one. Okay. Then what happened? Another black box moment. 1, 2, 3. Bam! It broke. But it never broke the 2.5%. I am waiting. So another black box again. 1, 2, 3. I wait. It didn't break nothing. So what do I do now? I wait. It is just waiting here. Then at exactly up there, I buy. That is a buy right there. That's a buy based on this black box. Okay. So for every black box I have placed the TP2 is for this one. TP2 for this one and TP2 for this one. So they are almost in the same territory. So either is take partials. Okay, we take partials. So right here, once the price reversed direction and hit my stop loss because I sold down there, I'm not gonna buy using the third model because I have got a sniper entry down there, not up there. I don't want to enter up there. I want to enter down there as a sniper entry at a cheaper price. So I'm gonna use a new black box. Okay, you got it? You got it? That's what you should do. That's exactly what you should do. So every buy position is now moving up like crazy to the upside. Then after the price has topped up, as you can see, resistance found, resistance observed. I look for a black box again. 1, 2, 3, and 1, 2, 3. These are better than this one. And at the first place, it didn't break the black box, which means I'm not interested in this doji, in this spinning top. I'm only interested in the full-bodied candle, which means I'm gonna sell down. I am selling down. It is possible that the market is gonna correct, come back here. I don't care if it fills this gap or not, but my only thought, my only goal is to enter a sell and make profit to the downside. Change this direction, buy it again. Simple as that. It is simple. So this way we will make money like crazy. Of course we will lose here and there, but it is not gonna be significant. The wins will be very significant. It will be very significant. Look at this shit. This pump, bro, would have made some serious money. Okay, then let me add some more and we'll finish this one. It's the same thing. That is the same chart that I showed you. I don't know why it is a duplicate. Oh yeah, okay. Because this one has a measurement, but right here it has no measurement at all. As you can see, for this, okay, we can delete this one and delete this one. Then come back here. Now the monster comes in. The monster. I don't care if it is a news. I don't care if it's nothing. The monster came in, as you can see. What happened? Find me a black box here. Anywhere else, anywhere in this chart, find me a black box. Where do you see a black box? Where do you see it? Is there a black box at all here? Is there a black box? Yes, where? Let me bring this man out here. Right there. Why? because it overlapped. And did it break the upside? No, it didn't. It didn't break the upside. What does that mean? It means I am waiting. I'm gonna wait. Then right here, what happened? So this is the low, this is the high, right? The price just broke the downside. So price already told us that we are moving down from up there. Do you see that? The signal up there. Okay, the 2.5% broke up. It went below the grid. Okay, so I'm trading this black box, not any other. Why? Because there is no other black box around here before it. Is there any black box here? Oh no, is this black box is the one I see. There is no other black box. This formed after this one, so I'm gonna say this one. Put my stop loss up. Never touch nothing. So wait. So it's a waiting game. Just a waiting game. Finally, another one. Another black box formed with these 3 candles. So what do? You set at 2.5%. Complete meltdown. A complete meltdown happened. Look at this shit. It is crazy. I don't know if it is a 50 people move or I don't. A single 1 hour candle covered 2 miles. That's exaggerating, but it covered an entire area, bro. Entire area. It is something calculated. They dumped this to hunt the buyers, to move out the buyers, okay, to shake their positions. So they are buyers already here, putting the stop loss down there, up there too. So now they are shaken, they are out of the trade. So now all the buyers are out, which means the price is cheap. It is very cheap. The price is very cheap. What does that mean? It means that there is no willing buyer at all. They are out. How? This thing got them out of the trade. Unless if you have a deep pocket, you will not tolerate this move. You will panic and get out. Okay. So they are the only buyers now. At the cheap price, now they move the price upside. And let me show you Holy Ghost. Holy Ghost, give us protection here. So they shook out the buyers down there, the downside, and look where they delivered. TP3. Do you see TP3? What happened at TP3? Collapsed. Look how beautiful it is. Oh my God, this is just nice. nice. It is just ridiculous. So anyways, we got in a trade, take partials down there. For this one, for this, you can take partials for this one. 30% out. Let's just bam. Then trade yourself to the downside. You got it. And then you wait for another, you hunt for another black box. You get another black box? Yes, well, there we go. 3 of them. So what do they offer? They offer a sale. Now they are in a sale program. The downside. Okay. And then I am waiting now. I measure this one. As you can see, TP to nail. After TP2, what happened? Price just changed gears. It changed direction. It changed direction. Look at that. It changed direction. At TP2, that's why we take partials there. That is why we take partials there. At the very possible reversal area, we take partials. How insane is that? It is insane. So our stop loss is still up there, not triggered yet. We took partial. Now the trade is against us. But in the way, we got another black box. Beautiful. 3%. Then exactly up there, we buy. We buy. Okay. Exactly up there. That's a buy rising. Our stop loss up there. Now it is triggered. We are out of the trade. But we are making money with this one. With this plan. Stop loss is still down there. This 1 hour entry. Bam. Then we found another one. That's a buy up there. Stop loss down there. Don't touch anything. At TP2 for this one, take partials. Then let's other 30%. And then what happened? Another black box formed. What do you do down there? You sell. That's a sale. I'm not gonna cover anything. I will never do anything shady. It is just ridiculous. It will sit in my mind all day long and I can't sleep, bro. If I have position, if I intentionally leave this thing alone, I'm not gonna do that. So let's figure this out. So that's a fair. Stop loss up there, and then a little bit move down, a little bit profit. Then what happened? It went up and triggered us out of the trade. What is the time now? The time is buy, 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 buy. We got 3 buys now. Running. Running. Then what happened? Another black box, baby. Another black box. Let's zoom in. Let us zoom in. Another black box. 1, 2, 3. Here, what happened? The first black box was big. The second and the third were hammers, right? So where am I focusing now? I'm focusing on the hammers. The big candle is gone. The big candle is gone. It's out of my view now. I don't care about that shit anymore. I only care about the hammers. And look exactly what happened here. Let me zoom in. The hammer ones were the ones the third candle was interested. It didn't move down. Look how selective it is. That is how we should be too. We are selective too. We are interested in the hammer. So that's a buy. Opposite. That's a buy. Then you use this in the week to measure your TP3. At TP3 you take profit, partial profits for this one, for this candle only. And then your stop loss is still down there. Because at how 2.5% is very useful. Very, very useful. 2.5%. Okay. If it was the full 5%, if it was the full 5%, it would be down there and down there. Okay. Let me clear this one. If it was the full 5%, it will be down there. Since it is halfway, it should be halfway. Down there, it's halfway. It's halfway. It's halfway. It's below this. On my previous video, I have told you that most of the time the price does not come and take the highs or the lows before leaving. Most of the time, so we can place our stop loss a little bit below when we are buying, a little bit above when we are selling. That's exactly what happened here. Look, it didn't come near. That's exactly what happened down there. Look, that's our stop loss. It is down there. It didn't trade down. Then I can show you everything. Look at here. That is black box. That's a buy, a support, and did the support come down there? Take out the loss? No, it didn't. It didn't. It moved up. It moved up. So these kinds of things, liquidity grams or whatever you call them, they are rare. They are rare like the force model. They are rare like the force model. These kinds of things. Okay, they are rare. If you want, you can place your stop loss down there as a 5%. It will protect you from these kinds of liquidity grabs, but it will also hurt your risk to reward. Your risk to reward will also be hurt if you give a room for a breathing room for the banks to play their dirty job. So right there, the normal black box would have protected us from these kinds of attacks. But the 2.5% is prone. It is prone. It is easy to be caught out by these kinds of moves. So I don't care if it comes down there. I lose money, I know, but I took partials up there. So and when we measure this, look how low it went. It went a little bit, not deep. This was not a dip, because if it went deep, the market would be forced to move down, because that would be a sell program. The algorithm will turn to a sell program if it went a little thick to the downside. So, in order not to cause that disruption in this buy order, they moved the price to a calculated area, a little bit above the 2.5%. The 2.5%. I can tell you that area is a 2.5% area. Okay, the 5% is full grid like this one. The 2.5% is halfway. I can tell you that that's exactly the 2.5%, halfway of the 5%. So the classic black boxes protection area. That's the red line. That is where the algorithm changes programs from a sell to a buy, from a sell to a buy, from buy to a sell, from buy to a sell, interchanging. That's a place. That red line is the price area. That's based on the black box's position. That red line is the place where the algorithm changes programs. Okay. So they deliberately moved it down a little close to the 2.5%, but never touched it. They can touch it, but they cannot pass. If they pass a little thick, that program will change to a sell program, and they will dump like crazy. They will dump to the downside, and they have to hit this TP, TP to downside. They have to move down. So they will kill time, a lot of time, and everything. This buy program will be disrupted. Okay. This run will be disrupted, and they will fall short, and try to cover the black box. This black box is TP to rise there, which means down there. They have to come down there, and after that take off. So they took care of this perfectly. They got out everyone who is long like us, and they protected the algorithm from changing programs to a sell program. Are still in a buy program. Okay. Beautiful. So anyways, that pumped up, maybe we lost money here. Okay. If maybe this thing is a lesson to put our stop loss down there, as you can see. Okay. That is a breathing area. This area from the loss to your stop loss is a breathing area. That's called 2.5% for a reason. It has a reason. It has a reason. Okay. Because that place, that low and that high, there is a lot of liquidity resting up there. So they want to disrupt that one and get everyone out. And they want to be the ones, the only ones who will be buying or selling. Okay. The only ones who will be buying or selling. So anyways, so that would be a loss. But if you put it at 2.5%, that's not a loss. That's not a loss. Not even close. Not even close. That is a little bit halfway. Above the halfway. So this thing pumped, we are already in a buy program. We are already in a buy position here. Here. And then here, another here. Then there, up there. And then there, you were in a buy. But we closed down there. That is an area where a lot of hunters happen. So we gotta stay out of that place. We gotta stay away from that place. That's an area of hunt. That is a battlefield. That is a battlefield. You don't wanna be there. Above there, that's a battlefield. Okay? Above there, that's a battlefield. You don't wanna be there. So your stop loss should be away from that battlefield. You don't wanna get hurt. Okay? So finally, this round 1, 2, and 3. That's a buy. I buy that shit. My stop loss the same thing. Just like I learned it down there, my stop loss down there. That's a buy. Okay. I don't care if the price comes down. It still will move up. If it does not and hit my red line, I know that we are in a sell program. And I sell that shit. And I sell that price. Okay, so this is it. In the next video, I'll show you this horrendous price move, ridiculous price move. I for myself missed pound dollar from the bottom. I bought it from the bottom of the trade on a real account, on a live account, and it went just like this one. Just like this one, it reaches the sky. At the possible bottom area, using the black box, I bought it. But due to fear, once I made the money, once it hit TP2 and TP3, I closed the other trade. I closed the trade. What if I let that run, bro? What if I let that run? That's 100% return or more. It was a crazy run, bro. It was a crazy run. So in the next time, I'll show you the other setups, okay? The other setups in the I'll see you in the next one. So thank you for watching.